FINGATE podcast all about retail loans part 1. Hi, I am Andrews C. John, founder of FINGATE, a boutique financial consultancy services firm in Bangalore to help you meet all your personal and business finance needs. Today, at this podcast episode, I will talk about 3 most popular types of retail loans: personal loan, home loan and gold loan. So let's start. Personal loan. A personal loan is an unsecured loan obtained by people from a bank or an NBFC to fund their own requirements. It is given based on important factors including income level, credit history, employment history, payback capacity, etc. Any personal financial necessity may be met with it, and the bank will not regulate its use. It can be used for house renovations, wedding-related costs, family vacations, children's education, buying the newest technology or home equipment, covering unforeseen medical costs, or any other situations. The typical requirements include your age, occupation, income, ability to repay the loan, and location, albeit these differ from bank to bank. Whether you are a professional, self-employed business person, or salaried worker, you must have a consistent source of income in order to apply for a personal loan. The business he/she works for, credit history, etc., all have an impact on a person's eligibility. A personal loan is not secured by any asset, in contrast to a mortgage or auto loan. The lender cannot sell any of your possessions at auction if you default on the loan because it is unsecured and the borrower did not put up collateral like gold or property to get it. Due to the higher perceived risk involved in approving them, personal loans have higher interest rates than loans for homes, cars, or gold. But just like with any other loan, defaulting on a personal loan has consequences that can hurt you later on when you apply for credit cards or other loans because it will appear on your credit report. Home loan. The dream of owning a home is shared by many. However, because to the dramatic increase in real estate, only select people can still live out such a dream. A home loan can help in this situation. A home loan is, as the name implies, the sum of money that a person borrows from banks or other financial organizations after fulfilling the requirements for obtaining a loan to buy a residential or commercial property. The borrowed funds must be returned to the lender in convenient monthly payments, EMI, at a specific interest rate. There are numerous banks and financial organizations that provide loans to assist you in building or purchasing your dream home. Additionally, loans may be used for building an addition or remodeling. Loan eligibility refers to your ability to obtain a loan and the amount of money you will receive to purchase a home. A number of factors, including the applicant's age, income, kind of employment and property, credit score, and many others, must be taken into account in order to establish your eligibility for a house loan. Under Section 80C of the Income Tax of India of 1971 Act, a borrower may deduct up to 1.5 lakh rupees from their income tax liability. While the Income Tax Act of India's Section 24B permits a deduction of up to 2 lakh rupees on the portion related to interest, only once the house has been finished are the income tax deductions possible. When you pay off your mortgage in full or in part before the agreed-upon repayment time, this is referred to as prepaying. Prepaying your loan can help you in your efforts to reduce your debt. A shorter loan term or a reduced monthly payment are typically the outcomes of prepaying your mortgage. Prepaying your debt will always save you money on interest. Gold loan. Indians are renowned around the world for having an obsession with gold. India, one of the biggest gold importers in the world, views gold as having great value, and as a potential source of future financial growth. Few people are aware that gold can be used to cover any unforeseen financial demands, including business startup costs, medical expenses, child tuition, car down payments, and even annual family trips. You might use the gold in your bank locker that has been sitting dormant when a situation develops that requires instant cash. The gold loan method is quite similar to other secured loan processes. In this situation, you take your gold objects, along with the proper documents, to a lender. The lender evaluates the gold pieces and verifies the paperwork. Based on the evaluations, the lender accepts the loan amount. To get the pledged gold objects, you must repay both the principal and the interest amount according to the loan agreement. Borrowing against gold is quickly becoming the most popular financing option, owing to lower interest rates charged by institutions than other types of retail loans, such as personal loans. Because gold loans are 100% secured, if you fail to return the loan amount within the loan term, you will be charged a higher interest rate, or you may lose the gold. Pledging gold is no longer regarded taboo and dishonorable in Indian society. This explains why gold loans are now widely accepted as a method of obtaining funds for immediate needs by people from all walks of life. Some people assume that it is more private than going to a local moneylender. Furthermore, as gold prices have increased, banks have begun to encourage customers to obtain gold loans. The transactions have grown in prominence as small-scale personal lending has grown in favor. Hope you now have the clarity on the three most popular types of retail loans available in India. In the next episode, I will talk about some other types of retail loans. Signing off. Yours truly, Andrews C. John.